Hi, family, and welcome back to another episode on Financially Fluent. I am your host, Jacqueline Mutuma. Today's topic is very interesting. I know you've seen that from the topic itself. So, today we'll be speaking on smart investments for beginners. All right. So, before we start, you need to understand that when you're selecting an investment plan for yourself, there are many things that you actually need to consider before you can choose the best investment that works for you. And some of these things are the financial goals. Okay, so the financial goals is basically what are you planning, or what do you want to achieve from the investment that you are going to select as an individual. And one of the first financial goals is obviously an emergency fund. If you are investing for an emergency fund, then you need a safe, liquid plans that will actually work for you. And by liquid, I mean these are investments that you can be able to have your money in. Okay, liquidity is how quickly can you transform your investments into cash, into liquid cash, like literally having money on your hands. Okay, and then the second financial goal is obviously retirement. If you're planning for retirement, then you obviously need long-term goals. All right, and then don't worry, we are going to look at these goals. I've actually created something very nice for you. So let me first give you the points on what to consider when you're selecting a plan that will work for you. Okay, and then the other thing is, if you are planning for a passive income, if your goal is to attain passive income, you also need to put that into consideration, because you need an investment that will be able to give you passive income. All right, and then the other thing is, if you're planning for a big purchase, you also need to consider that if your investment is about, let's say, maybe medium term investments, that is where your big purchases are, maybe you're investing for your children's education. These investments usually take about 3 to 5 years, and this you want to maybe invest in like medium term investments. If you're planning for big purchases, like a car, if you're planning to maybe build a house. So that is the first point. You need to look at the financial goals. All right, and then number two is your risk tolerance. How are you able to handle risk? So depending on your risk appetite, are you a person who, do you want high return, high risk investments? Do you prefer low return, low risk investments? And also on the point of risk, let me state that also age plays a big point when you are talking about risk tolerance. Okay, if you are still young, maybe you're just starting on your investment journey, you're 20, you in your early 20s, you can try to venture into high risk investments. Okay, but then do not go way beyond with those investments that are very high risk. All right, so and examples are cryptocurrencies. Cryptocurrencies, they really have a good return, but the risk is very high. All right, so depending on your risk tolerance, your risk appetite, that will also play a huge factor in determining the kind of investment that you are going to select for yourself. Okay, and then number three is the period of time that you actually have. Whatever investment you're going for, what time do you have for that particular investment? All right, so remember I said when it comes to investing, you are investing with a purpose. You're not just accumulating money without a reason, because then how will you know that the money you're accumulating, it has reached the point where it's supposed to be used? Okay, so when you're investing, you need to have a purpose, and that purpose goes along with what is the time, what time frame have you set for yourself? What time do you have? Are you planning for short-term investments, maybe 1 to 3 years? Are you planning for medium-term investments, maybe 3 to 5 years? And are you planning for long-term investments? Maybe those usually are about, let's say, 10 years and above. Okay. And then number 4 is your starting capital. How much money do you have at your disposal for the investment that you want to actually start investing in? Okay, so your starting capital will determine, it will play a huge role in determining the investment that will work for yourself. And then number 5 is your investment knowledge. And by investment knowledge is whatever plan you have decided, whatever investment plan you've chosen for yourself. Do you know about that investment? Do not just do not invest out of hype that is in the street, no matter how much an investment is hyped out there. As long as you do not understand about it, it's best to not invest in it until you can be able to actually understand what it is about. Okay. And then number 6 is your liquidity needs. As I said, liquidity is how quickly are you able to access that money. And this goes along with the financial goal that you have set for yourself. Okay. And then number 7 is the economic environment. And by economic environment, I mean, are we in a time of maybe high inflation? If the economy at that particular time, maybe we are in a season of high inflation, then the best investment would be hard assets like real estate, because real estate properties, they are immune to inflation. They are not affected by inflation. So that would be a good example of an investment to actually invest in during high inflation. Another economic environment is when we have high interest rates. And when we have high interest rates, it's good to actually invest in fixed deposits and treasury bills, because you'll also get a good return on your investment. Okay. And then so those are 7 points that you need to actually consider when you are choosing an investment plan for yourself. Now, some of the investments that you can actually venture that you can actually start with as you are starting on your investment journey, we have money market funds. They're very good for emergency fund, okay, for building an emergency fund. Apart from money market funds, we have the treasury bills and treasury bonds. And bills and bonds, these are government securities. And let me tell you guys, government securities they are one of the best investment options that you can actually opt for, because they are the safest. They are low risk, and they do not have a very low return. Actually, the return is pretty good, because most of the times the treasury bonds are usually, let's say, between 13 to 15%, and we do have like the infrastructure bonds which go up to 17%, and infrastructure bonds are actually tax free. And then for the treasury bills, the difference is that treasury bills, you buy them at a discounted price, and then when it matures, you actually get your money back, the full amount. So let's say you purchase a treasury bill of 100,000, okay, you'll pay 90,000. But when the money matures, maybe you've taken a 3-month treasury bill, then it will mature at 100,000 Kenyan shillings. Okay, so that is the benefit of treasury bills. And I always say, especially for the ladies, if you have the discipline to actually participate in a chama, and maybe you get your money like twice in a year, so the rounds that you're going, you get your money after every 6 months. A treasury bill, it's like that chama, only that it even comes with extra money. So if, let's say, for example, you are paying the school fees, you have your child who's in high school or about to get to high school, and for the parents that usually love to pay the school fees, maybe termly, in every term you want to clear the whole fees. So what you can actually do, if you have that money. Let's say you're supposed to pay it in 3 months, or you have a project you're supposed to pay in like 3 months. Take that money, put it in a treasury bill of 3 months. Let's say you purchase a bill of 100,000. Okay, you'll only pay 90,000, and then when that money matures, it will mature at 100,000 Kenya. So treasury bills are actually good if you have projects that have to be tackled maybe in the next 3 or 6 months or in an year's time. Maybe it's even planning for, December holiday. You have that money in January. Why don't you take a bill, a 12-month, that is a 1-year treasury bill, purchase that. If it's 100,000, purchase that bill at whatever amount it will be going for at the start of the year, that is January. Let that money stay there, let it mature, and by the time you're getting your money back in 12 months time, you're not getting the 90,000 that you invested. You're actually getting it at maybe like 100,000. That is good profit. Okay, and then when you get your money, you can be able to use it for whatever thing you had purposed for. All right. So we said money market fund, we said treasury bills and treasury bonds, and then we also have SACCOs. Okay, so SACCOs, if you want to actually buy shares in a SACCO, find a SACCO where you have like 2 or 3 people that you actually know, because a SACCO is actually good if you are intending to take up a loan for development. Okay, but how SACCOs work, you need to have invested some of your money, but you also need about 2 or 3 guarantors depending on the amount of loan that you want to apply. So let's say, for example, in like 6 months or 1 year's time, you need a loan to do a certain project. Okay, for personally, you have like 100,000, and the project requires about 300,000. Let's even call it a business. Maybe you want to start a business, you need a capital of 300K. Okay, you have 100K at your disposal. Your business, you want to start it in like an year's time. Why don't you take your 100K and then open up a SACCO where you have 2 or 3 of your friends there, people that you know can actually come through for you when you need them, because you're going to need these people to guarantee you their money so that you can get the loan from the SACCO and be able to start the business. Okay, so when you're selecting a SACCO, make sure you select a SACCO where you have people that you know that actually got your back. All right, you can be able to get your loan, open up the business, and then after you've opened up the business, obviously you'll pay back your loan and all that, and your shares will still be there. The SACCO shares will still be there, and they will continue to grow, and you'll still continue to earn dividend at the end of that financial year. All right, so I made a template of monthly breakdown. Let's say you're an individual who has around 10,000 Kenyan shillings and you want to diversify your portfolio. So I made this. I hope you can be able to see. So you don't need 10,000 to be able to have a diversified portfolio. You can actually do what? You can actually fix the amount of money that you have. Maybe it's 5,000. This was just a simple plan. If you're starting out on your investment journey and you want to know, like, how can I be able to diversify my portfolio so that you can make sure you have an emergency fund, you have a short-term goals fund, you have your medium-term goals fund, you have your long-term goals fund, and you are also building your wealth. So this is just a template. Depending on the amount of capital that you have, you can actually that word is disappearing in my head. You can actually try to fix this to match the amount of money that you have. Okay, and as you can see here, I have so this is category, amount, investment option, purpose, liquidity, and the notes right there at the end. So under category, we have emergency fund, we have retirement plan, we have medium-term investment, we have wealth growth, and personal development or side hustle. So I put there personal development because personal development is something that should actually be, I hope you guys have seen this because I want to put it down now. Okay, so let me explain it. Personal development, let's say for example you've had that a certain financial advisor, someone that is really big, and maybe there's a financial literacy training that is going to take place and you need to pay like 5,000 registration fee. This is the account where you go and take that money to be able to pay for the training and then go for that training. Because remember I said that personal development is something that should be of importance to all of us. Okay, so I said this is 10K. This is how I divided this. For the emergency fund, you want to put 3,000 Kenyan shillings. For your retirement plan, you put 2,000. For your medium term investment, you put 2,000. For your wealth growth, you also put 2K. And for your personal development or side hustle, you put 1,000 bob. Okay, and then for the investment option, under emergency fund, you try MMF. Under the retirement plan, you try the individual retirement benefit schemes. Okay, and then under medium term investment, you can try a balanced unit trust or bonds. So remember, this is medium term. Bonds, the least bond is for 2 years. The maximum bond is for 25 years. So for the medium term investment, you can actually invest in a government bond of maybe 3 to 5 years. Okay, and remember that this is the money you have put for maybe your education, maybe for a high purchase like a car, or maybe building your house, such. All right, and then for your wealth growth, you try shares or equity fund. Yeah, I'll advise equity fund or shares. All right, and then so the difference between equity fund and shares, when you are talking about shares or stocks, this is actually you purchasing stocks of a particular company, like one company. You buying stocks of one company. If that company performs well, your stocks are good. If that company makes losses, then it's the stock of you're buying shares of one company. But an equity fund, you use professionals to invest in a number of companies, not one company, but in a number of companies. But this is done with professionals. So when you actually buy an equity fund, you are buying multiple companies, not just one company. It's actually it's safer. The return is a bit lower if you compare with stocks, but it's on the risk tolerance, it's a bit safer than the stocks. Okay, and then for personal development, you want to save for a skill, or if you're starting a business, you buy the tools that you need, one tool at a time. All right, and then the purpose for emergency fund is a safety net, the retirement plan, that is a long-term financial goal, and then the medium-term investment, this is for growth and high purchases, and then wealth growth, this is obviously long-term wealth creation, and then for personal development, this can be for income generation. Okay, and then under liquidity, for an emergency fund, the liquidity needs to be very high. It needs to be between 2 to 3 days. And then for the retirement plan, the liquidity needs to be low, because we do not need to access that money right now. This is for retirement. That is when you are over maybe 60 years and above. But it also depends. There are people who retire at 30, 40 years. So it depends with what retirement actually means to you. Okay. And then for medium-term investment, the balanced unit trust and the bond, the liquidity is moderate. Sometimes if you want to maybe like get your money before the maturity time, there may be fees that are associated with that, and yeah, we can say the liquidity is moderate, all right? And then wealth growth, liquidity is low to moderate, all right? And then for the personal development, if you the liquidity varies because it depends if you're buying a tool, if you're saving up for the skill, it depends with the platform that you're using up to save. So the liquidity here will vary. And then if you're saving for emergency fund, what you need to do is you let it grow to at least 3 to 6 months of your living expenses. I said that, all right? And then for retirement plan, the benefit of retirement plan, this individual retirement benefit schemes usually offer tax relief, and they also have a compounding effect, all right? And then the medium term investment, you want to try and invest in bonds and shares, or rather they invest in bonds and shares, so the returns are pretty good, okay? And then for wealth growth benefit, higher long-term returns. We are talking about a long time, after a long term, okay? So the higher long-term returns. And then the benefit of personal development obviously is you are investing in yourself, and there's nothing as important as personal development, okay? So that is it for today, guys. I will make more videos explaining about some of these investments that we have. But if you're just starting out, some of the investments that you want to try are the ones that I mentioned. And if you did not know how to create your investment portfolio, I have given you a guide on how you can be able to actually achieve that. You don't have to follow it step by step the way it is, but you can compare and see. If you already have some of these portfolios, make sure that you review your portfolios after every 6 months to see how they are doing. Maybe you'll notice that you need to change maybe some of the portfolios. Maybe you need to increase more money. So you need to do an analysis at least every 6 months to see how your portfolios are performing, okay? And so that marks the end of today's video. I hope you learned something. And until next time, make sure that you stay wise and stay financially fluent. Bye.